Hello, it's episode 68 of the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobbie, and today, will a United States of Europe work? Or is it a pipe dream that we're better off out of? Well, Steve and I have already had a debate on Brexit. I think we're better off in, and, at least we can then call the shots. But Steve thinks it's built on so many falsehoods, it's bound to collapse, so we're best being the first one off the sinking ship. But with Britain out of the picture, it seems Jean-Claude Juncker is looking for a more unified Europe, perhaps with an EU army, for goodness sake, and more countries in the Eurozone using the euro as their currency, moving further into the United States of Europe, the vision that Winston Churchill had directly after the Second World War. Well, will that work? This is possibly a rhetorical question, but today let's look at how Europe differs from the United States of America and Australia, where we have federated states whose economies are managed or at least influenced by a single central bank. One of our listeners, Rob Dines, has asked us about this, so we thought we'd follow it up. So, Steve, in theory, is there any difference between the Fed in the United States governing monetary policy across the US and the ECB managing the policy across different countries of Europe?
Well, there is a huge difference, and that's because the federal government in America pays all the Social Security and collects most of the taxes, and then distributes that. The taxes are taken from a range of levels, but the spending they provide the money that is spent by the states to a large degree. Whereas in the European Union, it's still the states themselves, so-called countries, little places like France, who have to raise their own tax revenue, but can't actually finance their own government spending if it exceeds the 3% rule on the Maastricht Treaty. So it's very different. But at the same time, what we see happening in states, in countries like Australia and America, is comparable to what we see happening to countries in Europe, and that is frequently they will, quite literally, run out of money.
Yeah, because they're not getting enough divvied out from the federal pot. But also, what you say about the tax in the United States is true. There is a federal income tax, but there are state taxes as well. So, for example, in California, they add another 13% onto your federal tax, and it's often argued, isn't it? Well, this is good for competition. If you run out of money, just introduce your own local taxes, and if people don't like it, then they'll move.
Yeah, well, it's also just total chaos, unfortunately, because the states can be played off against each other in the opposite direction, and we'll move to the state that has the lowest tax, and you have this race to the bottom factor as well. It really is a case that the Americans just don't want to admit they lived in a mixed economy. So you have the federal government forever talking about abolishing taxes, and the state governments, which necessarily have to put those firemen on the beat, and certainly America put those police out there so that they can shoot random drivers going past. Pardon me. I better kneel while I say that, hadn't I? And they therefore put surreptitious taxes in various places. So what starts off looking like a very low tax country ends up being, in some ways, comparable to the tax levels you'll see in parts of Europe which actually have a social democratic commitment, but in a total mess as to how those taxes are actually administered.
So for a central bank to work, for the policies of a central bank to work, then all the conditions have to be the same across the region that central bank is governing in terms of tax and other economic policy. Is that what we're saying?
Largely. It goes beyond that, because also you have differential rates of inflation between states is a major issue in Europe. And the more I look at it, the more I think that the reason that Germany is running the huge trade surplus as it is, and is therefore doing very nicely out of the euro, and has, as well as an ideological commitment, has a financial commitment to remaining in it. What they've really done is use their low inflation rate as a weapon.
Yeah.
So because they can get, batten, they really have literally, bashed verbally rather than physically, I believe, trade unions in Germany to make sure they put in wage rate demands which are below the rate of labour productivity as much as they can manage it. That therefore means you have a low rate of inflation, and that low rate of inflation with the fixed exchange rate locked into the countries in the rest of Europe means a huge trade surplus over time as your goods get progressively cheaper and cheaper compared to your competitors. So that type of dynamic is another factor which you don't necessarily have in California versus Alabama, because you have transnational companies setting the prices and operating effectively trans-state back in America itself. Their price inflation Obviously, it'll be affected by the level of income that they can mop up in different states, but it won't have the same policy differences that apply in Europe.
So in that case, is Jean-Claude's vision, which is actually really Winston Churchill's vision, that we should have a United States of Europe and go one stage further, where everyone who's in it is in the Eurozone. Perhaps they all pay the same amount of tax. It all goes into a centralised government. I mean, is that necessarily a bad thing? Certainly, we're in the half-pregnant cow situation at the moment, aren't we?
Yeah, definitely half-pregnant. It would have been feasible in 1945. This is one of those things where the classic Irish joke, which is a sign of the intelligence of the Irish rather than stupidity. It's often put across. You are
going to tell me, how do I get here? Well, it depends where you're starting from.
Yeah, that's right. Yeah. I wouldn't start from here. If you'd started from 1945 with the incredible desire to come together and stop the slaughter of each other and the hatreds and so on that were so laid so bare by the Nazis, in that situation, yes, you could have had a United States of Europe being formed. But after 50 or 60 years, I think the main force that is leading to Europeans re-electing Nazi parties is the idea of this obsession that Juncker and friends have of creating a United States of Europe without having created some of the essential preconditions for it, including, of course, a national treasury.
So this idea of competition between the states, I've heard that used many, many times. That in the United States, you can set your own tax on top of the federal tax if you feel like you need to, because it's going to engender competition. You're not going to raise it too much because that's going to stop people moving to your state, or people will start moving out. I've heard people arguing, maybe the same thing should be introduced in Australia. I think, like you, it's a crazy idea, but you do hear that argument. But so, I mean, could you sort of engender that sort of thing? I mean, to what extent, for example, is a centralized interest rate part of the problem? What if Europe had a single currency, but each country had its own central bank? Could you do that? So they set interest rates and set all the other economic considerations just for that country.
You're going to be rewarded the bright idea of the morning one for that. I hadn't actually thought of that as an alternative, but you're right. If you actually could have central banks that's actually going back to what happened beforehand. But of course, they also had their own currencies. Frankly, they had their own treasury. What you're saying is let's abolish the euro.
Well, maybe. So my bright idea is let's do what we did before. But I mean, you could have the advantage of having a single currency still. And we sort of did, didn't we? Because businesses traded using the ECU, if you remember. The
ECU was a form of international currency. But the difficulty about, again, if you tried to have different interest rates being imposed on different countries with the same currency, I mean, it's feasible to imagine that, like the interest rate would be higher in, say, Greek loans than it was in German loans. But then, of course, what you'd have is people trying to borrow across those national boundaries, which you partly abolish by having a supranational organization like the EU. So I think it's structurally impossible to have that. Once you have a nation, you have an interest rate. That seems to be the rule. You certainly can have different interest rates charged at different constituencies inside that nation state, but the idea that there could be different base rates for different regions, I mean, they end up having to some extent, because there will be regional variations in the markup that commercial banks will put over the base rate. But to imagine different base rates in the same political union, yeah, that's a pretty good challenge, mate.
Oh, well, I thought I'd throw it out there. I mean, the issue about inflation rates being different in different countries within Europe, of course, applies, I guess, within individual countries as well. We don't measure it, and and there's all sorts of other factors as well. So let's take the United Kingdom, or let's even just look at England, so we don't have to argue about separate countries. There's a whole series of economic conditions which are very different in London compared to the north of England. So wages are lower in the north, house prices are higher in London, but you're still trying to control all of that with one central bank policy, and that policy is applying conditions across the whole country, even though the response to those is obviously going to be very different. They're trying to do the balancing act in the same way that, I'd imagine although it's not immediately evident because they don't talk a great deal about Greece, but you'd imagine that the ECB would be saying, well, yes, we're trying to do the same thing and balance things out for all the countries of Europe in the same way that the Bank of England tries to for all the counties of England.
Yeah, but the way the European Union claims it attempted to do that was by having each national state issue its own bonds. And then, of course, it can't actually provide government services until those bonds are sold because it doesn't have the capacity. Greece can't produce euros. So in that situation, the spread between German rates and Greek rates, which was supposed to be set by the market, was supposed to do that. Now, we said what actually happened was as soon as there was a European Union and a central bank and the other central banks were abolished, all those rate differentials collapsed. And that is, in fact, the explanation that Schäuble uses for why the crisis occurred. He said the fact that we priced German bonds at the same rate as Greece was underrating the risk of Greece, and therefore the market had to do a correction. And that's what's happened now. And to get the rates back to being convergent again, we all have to exercise German standard discipline, and hence the austerity policies imposed upon Greece to show the market that they are willing to take the tough decisions necessary to repay their debt. So again, this sort of stuff is where fiscal policy is more flexible, because it is possible for fiscal policy to say, right, we're going to build a wall in a particular let's choose a wall as a random idea of an infrastructure project. Build a wall in a particular set of states because we want to boost their economies. We don't build that wall in Boston, though in some ways it might be a good idea. Let's build it around MIT. So that or the economics department, of course, that flexibility doesn't exist with monetary policy as much. And if it does come up, then it's seen as flexibility provided by the market system, which is better than the government doing it, the usual ideological bias of Austrians, economists, and so on.
Right. I won't ask you what you got against. I think it's another discussion probably as to what you got against the economics department at Boston MIT. But look, let's. What about before we had the euro, even before we had the ECU? I think we had an agreement within Europe that we would fix exchange rates between various countries. So Britain opted out of that. But is that another way forward? It's another model, isn't it? To say, well, okay, perhaps the way that we have an ease of operating across borders within Europe, so that we know, for example, how much your dollar or your Deutschmark or whatever currency you're using, your drachma, so you know how many of whatever other currency is going to buy. Let's have a fixed exchange rate within Europe. Is that a model that could work? Could we go back to that?
Again, abolishing the euro, and this is again, we keep on coming back to this, because what we're looking at is an issue that applies within any nation that has its own treasury and own currency, and like Australia and America being examples of that, the UK, and therefore they have the possibility of both monetary policy and fiscal policy at the national level. But the states, if you have regions which are supposed to deliver local services, this has been a major issue, as you and I both know very well in the UK. The councils are the ones who are given some state money with the idea that that's where they're going to provide the garbage services and the libraries and schools and so on. But then under austerity, the central government doesn't provide them with enough money, so they start whacking taxes on, because if they don't put the taxes on, they can't raise the money needed to provide the services. And now the region of London that I live in, Lambeth, which I live in a pretty healthy part of Lambeth, thanks very much, but Lambeth Council in general is talking about having to cut back on garbage collections because they simply can't afford to raise it. And the bedroom tax goes up, so what you get as a result is a regressive nature of taxation at the level of government below the level where they can actually create their own money. And this is the real danger. That regressiveness in state services is then felt in the most depressed regions of that country, and that leads to right-wing backlashes. Well, wow, isn't that amazing? Yeah. So the Great Plague of London starts in Lambeth in 2018. You heard it here first. Yeah. Maybe it won't be my local coffee shop. It's too good. Anyway.
Or Birmingham, because they're having the same problem with garbage collection there. But I mean, you raise a point there about how, the argument from wherever it is, regions of Britain, or whether it's states within the United States or states particularly within Australia. We had the example, for example, a group of Liberal MPs in Western Australia who wanted to go alone and secede from the rest of Australia. Good luck to them on that one. But the argument is always that they're not getting enough money from central government. So West Australians think, we've got all the oil here, we're pushing all the money in, we're creating the wealth for the country, but we're not getting our share, which is the GST share in the case of Western Australia, because that's how they divvy up the money. Supposedly that 10% tax goes to the states, but it gets shared amongst the states. So there's always going to be someone who feels like they're not getting enough. But that's not central bank. I mean, that is the policy of the government and how they're redistributing taxes, in effect.
And that's what they can do. It's one thing about this layered nature of government spending is that since all government spending is not the responsibility of the federal government, if they want to do something unpleasant, the easiest way to do that unpleasantness is to pass the consequences on to a lower division, which has no control about the amount of money they've got coming in, but can control the amount of services they deliver, albeit very badly. And that's what's driving me out of the university sector, frankly, because in that sense, universities are delegates of in the UK, delegates of the federal government in terms of their responsibility to teach, but their revenue comes from kids, and the revenues are partly constrained, the £9,000 ceiling per kid. But what it means is the solution to that is to cut back on the services they deliver internally, which makes people think, God, it'd be better if we had private universities, wouldn't it? And this is the decay of the state is built into this gap between a national level body which can create its own money, which has its own treasury and its own central bank, and the delivery units when the top level doesn't provide the money needed for the bottom level to get the work job done in the first place.
So, well, let's look at Australia as an example then. I mean, does economic policy work better when we're working at smaller levels? So taking the WA example, if they had, should Australia have, for example, a multitude of interest rates? Should there be, 8 people doing the job of the RBA, and, the idea of the RBA disappears altogether? We just have separate ones for each part. No, I guess not, because we get back to the problem that if you're doing it with one single currency, it becomes too problematic.
Yeah, I mean, you've got to have separate currencies to make that feasible. And there is a dilemma between whether you have local or national level delivery of services. And certainly in some cases, you do want to have that delivery at the local level, but you want to have the responsibility to provide the funds necessary to time to the national level. And then, of course, you get conflicts between we're not getting enough of the money here, et cetera, et cetera. We're never going to be happy. I mean, this is one thing, to some extent, people have to say, except you want to be happy, die, go to heaven. We believe we're all happy up there. Down on earth, we're going to always be fighting over these things, but are we making it worse in general or better in general by the way we set up those contests? And I think at the moment, the way we fund the lower levels of government and then the top levels impose their wrong decision not to sufficiently fund government expenditure on the lower levels, then we have a recipe for breakdown.
But there's 2 issues here, isn't there? There's the one is how the central governments of a nation or a group of nations distributes money, how it redistributes taxation, basically. And then there's also the work of the central bank. They're very different things, aren't they? Or do both relate to that same issue that, you're going to, are both of them looking after the poor parts of the country or the region as well as the rich parts?
Yeah, well, you've got to do both. I mean, and this is unfortunately because we have this ideology that capitalism delivers what you deserve as an underlying mindset as to how we think about people who are in welfare and have end up on the street selling big issue. That ideology, which is a false ideology, then leads to these sorts of situations that exacerbate social breakdown when governments are supposed to be expressions of collective will. So I'm getting rather sick of looking at the mess, frankly.
Yeah. Well, I mean, if we look at Europe, speaking of a mess, then Germany obviously wouldn't say it is a mess because Germany is doing well, and we've spoken about this before. Because if they were separate currencies, then the Deutschmark would be worth a lot more. It's being weighed down. The euro is being weighed down by all the other nations in Europe that aren't doing so well. So that's great for Germany.
But even the Germans aren't happy about that.
But it strengthens their economy. It means
but it also means that people have got savings, and a lot of Germans do actually put their money in bank accounts rather than speculating on stock markets. And they certainly won't speculate on real estate because of the sensible rules they have there to restrain real estate speculation. So the older Germans are complaining of getting lousy return on their money, and it's all because of the euro, and they want to leave the euro.
Right, but they'll be gone soon. I mean, people this day and age, they're not saving money, are they?
Let's not get into that conversation about saving just yet on that one. But they're basically buying soy lattes and avocado toast, so far as I seem to be told by the media. Yeah,
but okay. So aside from that, I mean, you raise a good point, but I mean, it is a diminishing part of the population, isn't it, who are saving? Well,
they'll be replaced. They'll be replaced by one of the few eternals that you and I seem to have escaped is that you get older, your mindset changes.
For sure. Yeah. Well,
you and I are still wearing shorts.
We're just late to the party. That's all.
Indeed.
But I mean, but generally, I mean, within Europe, Germany is doing well because of the relative weakness of the euro compared to, and that is certainly helping Germany to export stuff. Whereas it's not seen as a weak euro for Greece. Their currency, the drachma, was far too strong. So can central banks do anything about that? If they cared, I'm not sure they do, but if they did care, can they do anything about it, or is that part of the problem? If you've got a centralized bank like the ECB that's covering so many different countries, it's just too big an area for them to control. And they get back to the question: is smaller better when it comes to central banks?
Well, they could get away with it if they actually were willing to do things like the modern debt jubilee that I've spoken about, and use that to target reduction in government debt. But that again requires the agreement of a central treasury, which doesn't exist. So you have again, it's partly also yes, smaller is better at that level, because I think it basically gives you more flexibility. If you had the capacity for exchange rates and interest rates to adjust between very, very small scales of the economy, there would be a point of diminishing returns in that particular issue, but you would be able to have economic variables buffering rather than unemployment buffering, which is the way that's the overall alternative we face these days. If the buffering of one area having too strong a currency and therefore having diminishing sales can't be worn by a currency depreciated because it doesn't have its own currency, then it wears it at a lower level of employment. The level of demand falls relative to labour, and we have unemployment. So that's, at the moment, the buffering has all been carried by the unworking class.
Right. But it's not where we're seeing all of these attempts at secession, I should say, and obviously Brexit is the prime example. Brexit, Britain is not part of the euro. So it's not the work of the ECB that's had the influence on the UK economy.
It is to some extent, because the fact that the British pound loses out to the German mark, which doesn't exist, and therefore you have industry falling from 23% of GDP, roughly the same scale as Germany, 23%, 15, 20 years ago, down to 11% now. That can be seen as a direct impact of having the formation of the European Union, whether or not Britain is part of it. And of course, what Britain wears, and this is where the racist backlash that supported UKIP came from, what they do wear is the free movement of labour. And because their economy hasn't tanked as much as those that have the euro, they copped a large influx of migrants from the EU states and peripheral states. So, there's no getting away from, in this globalized world, there ain't no getting away from it unless you can manage to move to Mars.
So, I mean, is there any hope for Europe then? Is there anything that Europe could do, which is, if we went back, how far do we have to take Europe back while still getting the advantages of working together? Is it getting back to the stage where we have our own currencies and we look at perhaps fixing exchange rates between those countries? Is that the point at which makes sense?
Yeah, my feeling is the euro returning to what the ECU used to be, ECU, where it's used to international trade between countries in Europe. There is some control over whether you can increase or decrease your relative exchange rate within Europe, and then people internationally trade with the euro and then have to exchange the euro for their domestic currencies. That would be a workable system, I think. That would give the flexibility that Europe has lost by forming the European Union and the ECB without any regional capability.
Right. It's either that or you go the way of Australia and the United States and you say, right, well, disband with your governments. We'll take all the tax money. Thank you very much. We're going to form our own defense. We'll manage education and everything else across the whole of Europe. You might be called Germany, but really you're just another part of Europe. And that's a long way to go, isn't it?
I think it's a total, that's where the fair is, unfortunately.
Yeah, well, that's where Jean-Claude Juncker might be, though.
I do. I won't call him to a fairy to his face, but I do have that feeling.
Good luck with that one. All right, okay, very good, Steve. We'll catch you again soon.
Okay, mate, bye.
So it's all the way or not at all, perhaps. Well, certainly as far as the euro area is concerned. Now, look, next time, dynamic stochastic general equilibrium models. Yes. What the hell are they, and what's wrong with them? That's next time on the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobbie. I'll see you back here for that one.